Thank you for joining me, Fiona Cincotta, here at StoneX. And today I'm joined by Bert, who is Vice President of Derivatives, Clearing and Execution Sales here at StoneX. Thank you so much for taking the time to join us today.
Thank you, Fiona. Thanks for having me.
So much to talk about. I mean, obviously, it's been 3 months since Donald Trump had his inauguration and became President of the United States of America. What reaction and what reflections have you got as far as the markets are concerned?
So it's been quite tumultuous, it's been quite complex and messy, just to put it very simply. The market has had to adapt to a lot of tariffs. So it's been tariffs on, tariffs off, tariffs on, paused. So the market is very confused. And the easy reaction from clients has to be cautious. Being cautious. And on the caution side, we've seen the volume starting to dwindle, so less new positions, managing positions slightly differently. And we've seen a lot of AAs, as we call them in Europe, or EFPs, so exchange for physical. So basically, clients trying to minimize the exposure on the derivatives markets in case we have a headline that comes in and makes a massive market move that would expose a client on their initial margin or even initial margin plus variation margin. So generally speaking, clients quite frustrated, looking at a very messy market, but being cautious.
Yeah. I mean, uncertainty definitely feels like it's the name of the game right now, doesn't it? And that's sort of changing behaviors, seeing different strategies sort of taking hold. And I am looking ahead to next week. Next week is also a big week as far as not only Trump tariffs are concerned, but also more market-specific events. So what are you going to be watching?
So we're watching 3 elements for the week ahead. The continuation of the current Ukraine-Russia peace or ceasefire talks and what it could change for our industry in grains and oilseeds. Then we've got a major report on the 31st of March, which is the US planting intention report. And also on the 2nd of April, we go back to Trump. There may be more tariffs coming in. So if I look at those 3 elements, the Ukraine-Russia story should not change an awful lot in terms of grains and oilseeds because the war has been going on for 3 years. And we are in an industry which is very versatile, that has been able to adapt. When the war started, it was a logistical nightmare. But since then, we have a very well-organized grains and oilseed industry, and changes now are not going to change massively what has been reorganized over the past 3 years. But generally speaking, the view of the market is quite divided. People tend to think that if the war comes to an end, the insurance premium of the CIF, so cost of insurance and freight, the I of insurance, should come off because you take the insurance premium away for the war purpose. So some would expect the Black Sea region to become more competitive in that sense, but others are more divided by thinking that if the war ends, then the FOB, the free on board part of your costs of transporting and so on, could go up because the ruble would go up, and therefore the Russian prices could go up. Now, in terms of fundamentals, we've seen the Ukrainians and the Russians stating quite clearly that they've exported very briskly in the start of the season. The end of the season is going to be less fast. The Ukrainians have got a 16.2 million ton quota, for example, on wheat. They already exported 76% of it, and there's little left of it. And when we speak to our local clients in Ukraine, they don't think that there is 16.2 million tons. There's probably 14.5. So again, it makes a tighter market for the end of the season. Similarly, Russia stated that they will allow 10.8 million tons of exports from March to June. We've seen the January, February and March so far exports dwindle, and we have a tightening of that export potential. So we're going to look at the impact of the end of the war or the ceasefire on headlines, and we've seen over the past week or so a lot of specs selling the market in wheat or in corn, for example, thinking that the war being over, it frees export potentials. But in reality, we think that it's not going to change the logistics that much. And then we're going to look further ahead all the way to June, how much of the export capability is still there and how it is being utilized.
Yeah, excellent. So it's quite interesting as well. It's not such a simple outlook as one might initially expect.
That's it. I mean, there's always the headline,
Yeah.
and then there's the actual fundamentals. Then when we look at the March 31st report from Monday, it's a very big one for us in grains and oilseeds. The market is expecting a huge shift for the US into planting more corn and less soybean. So we have an average estimate of corn planting around the 94 million acre mark. That's up from 90.6 last year. Some are going much further, saying it could be 95, 95 and a half. So that's that element of potential volatility that we could see. Is it going to be 94 or is it going to be 95 or 95 and a half? And then in soybean, last year we were 87.1 million acres. This year we're expecting 83.7 to 84 million acres. And again, that's going to be finding out what the exact figure is and how the market reacts. That's very interesting in the context of what we've seen so far. The funds have been quite long in corn for a very long time. They had a record long at one point. That corn long has been decimated in a way because they had 4 pillars to build that long, which was the Brazilian safrinha crop, so the second corn crop, the Argentine dryness, the US strong ethanol demand, and the fast pace of exports in the US. Now, out of those 4 pillars, one has disappeared recently in the sense that the safrinha crop, which was expected to be planted slowly because the soybean crop that came before it was planted slowly, therefore grew slowly, therefore came to be harvested later. That harvest has picked up, and therefore the planting has picked up as well. And by the 10th of March, 92% of that second safrinha crop was planted in the so-called ideal planting window. So that has taken some shine away from the spec long, and we've got that uncertainty about that massive potential planting for new crop in the US, and I think the specs have been very cautious about holding that long.
Yeah, excellent. And then finally, there is also the return to tariffs next week as well. How might that implement or be affecting?
Again, I think it's very interesting, especially from a timing point of view, because the tariffs we've seen so far have had a tendency to put pressure on the market in the sense that it brings uncertainty in terms of what are you going to consume? What kind of orders are you going to get? Are you better off using stocks? So yes, it might create a drawdown on stocks, but also it creates uncertainty for the future. And each time tariffs have been announced and announced again, we've seen the market correct and correct and correct again. So it could be that it's another element of correction next week, depending on how deep those tariffs are again and on what. But it creates an opportunity in grains and oilseeds in the sense that we've seen from a technical point of view, the RSI going from the 50% mark, which is very pivotal. It doesn't give us much indication, to going down to the upper to lower 30s in Chicago wheat, corn and soybean. So it feels like our markets are being dragged down still, and we're not too far away from a level where we could have a technical bounce. So that's something that we're going to watch post those tariffs to see if we go into oversold territory to allow us to potentially have a technical bounce and how far it would take us.
Yeah, excellent. I mean, that's a really key area to be watching. So yeah, and that's interesting because we've seen sort of that idea of being oversold or overbought on other markets as well, sort of on the stock indices markets. And we've seen that bounce more recently on the Nasdaq, for example, completely different. So do you envisage a return or more of a return to fundamentals then going forward?
So fundamentals always dominate eventually, but it's true that over the past 3 months fundamentals have been thrown out of the window because we've got all those tariffs, all that uncertainty, plus all the geopolitical on top of it. Now, what is interesting is that we have had a story about corn for quite some time, which I've very briefly described, and wheat had been on the back foot. Wheat was the lonely child of the grains and oilseeds in a way. And it's starting to change. We're starting to see a story coming back into wheat, and that story is dryness. So fundamentally, we're going to look at April to June at how that dryness story is going to play out. So if I look at the US are 45% in drought for winter wheat. The Kansas wheat conditions are 48% good to excellent. It's not a bad figure, but it feels like it's a toppy figure, and it can only get worse from here for many participants. So we're going to watch those conditions very carefully to see if they remain where they are or if they degrade. On top of it, we hear that Russia has had issues with dryness for quite some time. Production estimates are for wheat 77 to 85 million tons, with a more realistic range of 81, 82. That could change very quickly if it remains dry. And for the moment, some parts of southern Russia have received some rain, but the rest of Russia is still very dry. And that dryness is slowly starting to take hold in Eastern or Central Europe. Some even mention Turkey. So we're going to have to watch these elements to see if we go back to a fundamental element of weather that would affect wheat production, and therefore also potentially corn production, because it needs to be not so dry for corn to grow as well, and corn is mostly a spring plant rather than a winter plant. So when we look at those fundamentals, it's going to be interesting to see the shifts that is going to cause also in terms of the spec industry. So with the tariffs, we've seen the specs piling in, for example, in Paris wheat, shorting Paris wheat massively. They've got a 185,000 lots short overall. The funds themselves are 216,000 lots short. It's a position that's very front-loaded in the sense that the May has got an open interest of about 280k, and the SEP and DEC are around 115, 120k. So we can only assume that there's a lot of short still in the May, and May is coming to the end of the season. The May is the last contract of this crop. So it is going to get tight in terms of timing, and we could see a May-September fly away. I mean, we've seen it going positive today to plus 0.50. So that creates an environment where the specs have shorted our markets a lot because of the tariffs. But fundamentally, we could have a story brewing, and if that story takes hold, we could have a reversal of those specs, and it could make an ugly exit.
That's extremely interesting. So much to be watching out for. Thank you so much for joining us today and discussing and talking us through the implications of Trump's first 3 months in power, what you'll be watching next week, and this focus also on fundamentals. So thank you.
Thank you for having me.